Netflix is having so much success that investors are really starting to notice. The company made some big developments in the most recent quarter, including more investments into live programming and an announcement of upcoming price increases. I'll talk about those two big factors and other things that investors need to know about Netflix stock. So let's jump in.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
You may have watched the Christmas Day NFL games on Netflix, and 30 million people watched as well. A lot of investors were curious about that investment in the NFL games and what kind of response the audience would give. Netflix co-CEO said that the average audience for those games were 30 million and 31 million. That's a pretty large audience for a NFL game, a mid-season NFL game. And so I think those investments are really going to catch the attention of not just investors, but sports leagues like the NFL. They've been increasingly worried about the decline in cable consumers, in cable subscribers, and most live sports programming like the NBA, the NFL, have been experiencing declines because of a declining audience on cable, on satellite, and more consumers are switching to streaming. So that was interesting. And Netflix said that they're constantly trying to broaden their programming, and live events is one of those things, and sports is part of those live events. But it doesn't really change the underlying economics of full season big league sports being extremely challenging. If there was a path where we can actually make the economics work for both us and the league, we would certainly explore it. Those were interesting developments from Netflix that has long resisted investing in sports rights because of the economics. It's so expensive to bid for sports rights, to have the rights to air these sporting events, that Netflix has resisted making these investments. But now they're experimenting, right? They're experimenting, collecting data, and also showing to these leagues like the NFL, hey, look, we have a massive audience here on Netflix. We have over 300 million subscribers. So if you want to increase the reach of your league, then you need to partner with us. You've got to give us better terms in order to get this deal done. You can't negotiate from a position of power against us because we have the negotiating power. That's the message that Netflix is sending to the leagues like the NFL and the NBA and the MLB, demonstrating to them, look at the audience you can reach if you make a deal with us versus if you make a deal with some studio that only wants to show your content on their live programming in their cable TV segment or in their streaming live TV segment, which has a significantly smaller audience. So you may be able to get more money for the content rights sale to those other companies like Disney for ESPN, for instance, but you're not going to get that reach that we can provide you. And the reason these leagues want that reach is because it thrives on popularity. The more people that are watching the NFL, the more people that are buying NFL jerseys, the more advertising the teams can sell, the more content in game the companies can sell, and the league's popularity, the value of all of these leagues increases, the value of all of the teams increase. And that's what the leagues want. They want that increasing popularity, increasing reach, increasing value. But more so than ever, Netflix is becoming someone that they need to partner with to have that work. So they also talked about their deal with the WWE, the wrestling company. And in their first week, they drew about 5 million views, which is about twice the audience that Monday Night Raw usually gets in linear television, like I talked about earlier. So even something like Monday Night Raw wrestling got double the views that it normally gets, double the views, right? That's huge. And so they may be willing to accept lower content rights payments in exchange for access to this larger audience, which is powerful for Netflix because that can give Netflix a competitive advantage against other companies when they're bidding for these sports rights. Disney, with its ESPN segment, might bid, let's say, $10 billion for the NBA season per year. Netflix can come in and bid $7 billion, but also offer the league the access to over 300 million subscribers and a larger audience, more views, more engagement. And the NBA might decide, you know what? It's worth it for us to take $3 billion less and have access to this larger audience. It remains to be seen, but that might be something that these leagues consider. And then that gives Netflix a huge competitive advantage because they can get these rights at the lower cost. And then if they have those sports rights, of course, more people are going to be interested in subscribing to Netflix and joining Netflix and paying higher monthly prices for their Netflix subscription. So that segues nicely into our next topic, which is price increases. And before Netflix raises prices, they look to add more value to their members. And of course, we just talked about one way they can add more value is by adding more live content, more sports content. They listen for signals like engagement, retention, acquisition, and there's some secondary signals as well. And so when Netflix is confident that their viewers are getting more value from their Netflix subscription, then Netflix raises prices and says, "Look, we've added more value to you. Now we're asking you to pay a little bit more so that we can use that money to add even more value for you, and then we'll ask you to pay a little bit more, and then we'll add even more value, and then we'll ask you to pay a little bit more." And consumers have so far been willing to go along with this. Netflix saying that you've seen us raise prices across a number of markets, including the Europe, Middle East, and Asia, Asia Pacific, Latin America, over the last couple of quarters across most plans, including advertising. And they still feel really good about their long-term monetization opportunity. Because if you think about it, their entry price of $7.99 a month in the US and Canada, or $17.99 for the standard without ads version, is still a really great value. The customer value proposition is excellent when you compare with other forms of entertainment. A Netflix subscription adds incredible value to customers. So they're increasingly willing to pay for that Netflix subscription, and Netflix is incrementally raising prices. Customers are happy to pay that because they see themselves getting more value when they pay a higher price. And so that positive virtuous cycle continues feeding on itself. Great news to be sure for Netflix stock investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.